Happy weekend, happy Saturday. Hey team. So this is the weekend video, and I will send you the email with the updated scan list. It's drastically reduced due to the market conditions, and so the agenda is going to be basically I'm going to go over the market, what I see, which I've been kind of posting to you guys all week, and Thursday and Friday, just kind of played out what I was showing you throughout the week about the downtrend being continued to show some strength. Then I'm going to go over my current positions, where I'm at with them, and how I'm handling them. And then I'm going to go through a few stocks that I on my scans that I did over the weekend, over this earlier today, that I see kind of potential setups in case we do get a rally. We are on getting to, or if not already there, in oversold conditions. The market timing it's basically at 7, I think, either between 5 and 7, close on Friday, and the VIX is over 28. So everything is, the put to call ratio, it's over 1. Anything over 1.2, it's ridiculously oversold. Anything over 1, we're getting to the oversold. So we're almost there. We're almost there. I'm not saying almost there for we're done going down and here we go. Let's start buying everything and we're going higher. I'm saying we're almost there to potentially getting a little bounce rally. We are not. I do not foresee us just going higher from here. I'm saying going as far as reaching new highs. I do, see a little bit of a rally, a little just dead cat bounce rally from the oversold conditions, just like we had earlier in the month, but nothing sustainable. I'm showing here. I'm starting with the weekly chart to kind of see a long trend picture. I'm going to go top down approach. I'm going to go weekly, daily, and then to the 15-minute I normally show, so you can kind of see what's going on here. So the bottom trend line has been breached. Okay, we breached it on Friday. This is going back to March of 2020, the pandemic lows. This uptrend was tested and touched back in the beginning of March, our March lows, and this continued uptrend has just been breached on Friday. So definitely not a positive sign. This uptrend channel, this channel that we're in on a weekly basis, we are definitely hovering the bottom part of it, and it's not looking very positive. On the daily, we are getting close to this little trend line here. We almost getting close to the bottom here in March. I don't know if you guys recall a few weeks back I was saying how this looks like a reverse head and shoulders, where you had the shoulder here, you had the head, and then we were back here when I said it, that if this does continue to be this pattern, we're going to go much lower, and we did here. I was actually expecting this to hold and continue to go higher, and then eventually break this level and go higher. And what we did was we broke it, but we broke it to the downside. So now we're going to be testing the March lows, and if we break the March lows, guys, I mean, we're looking at back here, 3,000 level, 300 level is not far fetched. So that could be a lot of pain. So there's a lot of, let me clean this up. There's a lot of headwind here. I know I have a lot of lines here because I want to be alerted when certain levels get broken through or on the upside. The 50, it's right here, the red line. We hit our head on the 50 several times right here, and then we just kind of push. Thursday and Friday we just broke down. Higher volume. This has been raising volume on low days. 100% negative sign. We closed at the low of the day on both Thursday, actually even Wednesday, low side, Thursday and Friday. Extremely negative on higher volume. Not a good sign. The relative strength line, it's just been going lower and lower and lower. So again, not not anything that you want to be buying stocks here. Um, and then what I show you guys during the week, this is the channel that we had. Remember, it's kind of how I drew it, where we kind of had a little breach here, and then this is the middle of the road, where we were in the beginning of the week. We were kind of, we hit the head here, we hit the head here, and then Thursday morning we hit our head here, and we have done nothing but go down since Thursday at 11 a.m. I mean, this is like 10. This is 9:45, 10, 10:30. Yeah, by 10:30, 11 a.m. on Thursday, we just went downhill, and we closed at the low on Friday afternoon. So nasty. I mean, nasty, nasty, nasty. And it was up volume as we were going down towards the end of the week, towards the end of the day, midday on. So it's just nasty. I got stopped out of more than like 60% of all my holdings. I'm like 40% from where I was at the beginning of the week. Luckily, there was some nice uptrends during the week that I was able to take some profits on, and what I got stopped out on were basically just going back down to like only making 1 or 2% from being up 3, 4, 5%. So, and then some I lost, 1 or 2%. The highest one I think I lost 3.5% on one of them. But it was net not that bad. That's why you have stops. That's why you adhere to your stops and honor them, because you can go lower. If let's say you have a stop out here somewhere, and you say, well, I got a little bounce here, I'm gonna wait until it gets back up here again, and then boom, you're 20 points lower. So honor stops. It's very, very important. SPY, I mean, same thing. Just nasty sell-off. I mean, look at the weekly here. That also breached this March pandemic low downtrend line. So we're heading into some troubled areas here. We have to be careful, okay? The daily broke this one right here. The S&P was the one that was kind of holding a little bit better than the Nasdaq, but again, it was above the 50 for a few days, and then once it broke it, it just sliced right through it. So we're not doing too good. So I mean, forecast for next week, I'm assuming from Monday through Friday there will be at least one update. Just because we are on such extreme oversold conditions. Again, we can maintain in an oversold condition for a lot longer. So it's not like just because we're in it, okay, that's it. The next day we're up. No, I mean, that's what we were on Thursday, and then Friday we're just nasty. So eventually, when I get to my stock setups, I want to go through those, but only if we're up. Don't just I even if these that I'm gonna go through eventually they trigger. If the market is down, don't take any action. Just wait to get the head, to get wind behind your back and have the market be up, to kind of sustain any kind of rally, or at least for the short term, and then take profits into strength. I mean, this market is not, guys. We're not going to be doing this. We're not. We might do this, and then something like this, or might have a rally, and then just like we did here, or we had a nice few days in a row rally. I mean, even this, I don't think we're gonna have this anymore. We might have something like this, where we have 3 or 4 days, or 1 or 2 days, one big days, and then boom, maybe something like this, and then boom. Just because the Fed, don't fight the Fed. The Fed is going to be raising interest rates. We're going to be in a rate rising cycle, so that is not conducive to markets going up. So we are not. There will be better days. Maybe later in the year, we're going to assimilate all these rate hikes, and then go much lower to then eventually base out and then come back and then break out and then start going higher again. But these levels up here are going to be a long way away. I don't foresee this anytime in the next month or two, if at all, anytime in the next quarter or 2 quarters. So any little rallies, take profits. If you have a base forming and then you take an entry and it goes up a little bit, take profits, and then once you start see breaking down, stop out, because they can come back down again to your breakout and go lower again. So just be careful. Don't be too aggressive here. Okay. All right. That's pretty much my 2 cents on the market. Let me go over what I'm currently holding. Again, the trades that I posted that I closed out, they all got stopped out. Just let me go through 1 or 2. For example, NOG made really good profits on NOG. I think I went in at somewhere in the 27, 28 area around here. I went to like 30 something. I took maybe not 30 something, maybe like 29, 27. I took about 3 point move on this. It was a couple $100 and nothing crazy. And then once it broke the 21, I was out. That's it. I mean, as simple as that. I was out right there when it broke the 21, and look what I avoided. Okay, so you have a plan. Stick to your plan, and don't take bigger losses than you have to. Look at Alcoa. Great trending stock. It was nice little breakout here. You took it in the low 90s, took it 98. Even here, kind of holding the 21, holding the 50. You made a point or two, and then boom, nasty sell-off. So everything is just breakouts are not sustainable. So take profits into strength. Oxy, another one that I took some nice profits on. I got in right there in this breakout, and then when it came back inside, I got out of the scratch. I avoided all this. So my plan was, okay, this is a breakout. I got alerted, downtrend line. Decent volume, wasn't really crazy, but okay, I took it. I took it right there, and then once it came back inside and it reversed below what my pivot was, I got out. That's it for a scratch. I might have made like 0.5% or lost 0.5%. It's a scratch, break even, no big deal. And look what I avoided. I avoided, another like 7 or 8 points, 7 or 8% lower from this point, where it was down 4% on Friday. But look at this nasty downturn on Thursday as well. So again, DVN, I had some nice profits on this one. I took it somewhere here in the 63 range. I took it all the way up to I think it's like 65 or something like that. I took partial profits on, and when it came back inside, I got stopped out. It was maybe like a 1% gain. Again, it didn't take. The breakout didn't take. But so you get stopped out when it doesn't work. And what do? You avoid all this. You avoid another 3 points down on Friday and another 2 points down on Thursday. So honor your stops, okay? So this is what I currently have on right now, and the reasoning and how I'm managing and how I'm going to handle these trades in case you guys are in it, or just as an educational in case you get in a situation where I'm in, and then you know how to get out of it. So TBT, I'm in TBT right now. That's definitely working. I got in right here in this little breakout right here, and then I added again right here in this little trend line. So that's been working fine. I think I added some more when it came back down to the 90 MA. I'm holding this, and I've been selling 28 and 27 covered calls on this. So I'm pretty profitable on this trade. I'm gonna hold it. This is a hedge against the interest rates. So as the interest rates keep rising, this is gonna keep on rising. So I'm kind of hedging against my own rates on my mortgage that I potentially have that I have locked, but I do not want any issues with that. So that if the rates are going to be going higher, this is going to be going higher, this is going to be going higher. So I'm using it as a hedge towards inflation and towards the Fed on my other long positions, but it's working. Everything else, let me see what else. Okay, XOP. This is an entry that I took once once it came back, not violated, once it came back into the 21 EMA, I got into it right here. But the reason why I didn't get myself stopped out when it broke my trend line, when it broke 21, is because I bought it with a built-in hedge. So my cost basis, it's like somewhere down here. So I really own it. That's the reason why I got in it. I got in it in a situation through a vertical spread where my cost basis is the 50. So my stop out is a break below the 50, not below the 21, because when I went long here, I did it as a vertical with a built-in short. So that financed this transaction here and lowered my cost basis to here. I hope that makes sense. So that's where I'm at on XLP. SWCH. Again, this is a trade that I made, which is, it was down 1 cent on Friday, so that's not that bad. This is a trade that I'm in for a potential buyout rumors at 37. So again, I'm holding my cost basis on this. It's somewhere around here at 28. So I have it through a call. It cost me $1.30. So the most I only have 2. So the most I can lose is 260. So again, I'm risking about $200 to make about $1,200 if it does plan out. So again, that's the only reason why I have this. It's working. It's not doing. It's not really doing that bad. It's holding its own. Actually, I'm surprised for the market the way it is to only be down 1 cent on Friday, a little bit after hour. I mean, no big deal. But that's really what I'm doing with this. It's a trade for a potential buyout based on unusual option activities that I saw. Okay. I got stopped out of that. ACM. I got into ACM when it kind of, in this day right here, because I had ACM. I took it right here. I took some profits on it. I took it again right here. I got stopped out here, and I got back into it again when it got back to the 50, but the same thing. I got into it hedged. So my cost basis is down here at 70. So a break below the 200, I'm out on ACM. I'm actually going to be out. I'm stopped out on ACM on 50% if it breaks Friday's low. And then I'm going to let the other ones run a little bit because my hedge is going to help me out with this. So that's where I'm at on ACM. On, I have a covered call on at 56. So I own it at a 53, I think, cost basis. So net, I'm down like, $110, something like that. So again, it's not a big deal. I'm inside my 3.5 to 5.5% stop loss. So I'm still holding this just because I got it hedged with covered calls on it. So I'm letting it go a little bit. A decisive close below $50, I will be stopped out. Okay, on Mara. I have the 20 short put. I have the 20 short put on Mara. I've been selling covered calls on, not covered calls. I've been selling short calls on this because I have the put. I've been selling short puts on this. So I have I think I have a 17.5, I think it is, or 17 net cost basis. So I'm still, technically above my cost. My short put is at 20, so my short put, it's below. But my net out of pocket is at 17.5, I believe. So I'm still good on this position. The smallest little rally that we get either Monday or Tuesday or Wednesday, whenever we get a little rally, just 1 day rally, that's all I need next week. I am going to be heavily selling short calls against all my short puts to generate more income. I'm probably going to go 2x. So I own 20 contracts. I'm probably going to go 25, 30 contracts short at much higher levels that are going to be very unlikely to get breached in the next week or so, just to generate more and lower this to even 15.5 with the credits received. So that's Mara. SQ. I currently have a strangle on this. I have the 140. Sorry, 140 is up here. I have the 140. Let me clean this up. I have the 140 short call and the 95 short put. So I'm still good as far as levels. I'm underwater. I have a drawdown because I sold the short puts here and it's gone nothing but lower. But overall, my net cost basis will be like a 90, 150 if you want to look at it that way because of the credits I received. So again, if we have an update on anytime next week, I'm going to continue to sell short calls here. I'm going to probably go 2x on the short calls to what I have here. I have 7 contracts. I'm probably going to go like 10 to 15 short calls here on top of the ones I already have to generate more credit to feed this drawdown here and to net my position to a much favorable scenario. SMH, I have the 230. I have the 230 short call here. It's getting close, but I'm still good. And I sold the 265 that I closed on Thursday or Friday. I think it was Thursday. I closed on Friday for a profit. So net, I think I have a 225 cost basis based on what the credits I've received. And again, the same thing. A little bit of rally next week, and this goes up like 4 or 5 points. I am going to continue to sell right at the 50 price range to get more credit to feed and finance this drawdown. In case we do go lower, I'm just going to keep on feeding over here credits to keep pumping in money into the position to net make it a lot more favorable and eventually close it out for a nice gain. Same concept on Nvidia. Nvidia, this is my biggest position and the one that I have the largest drawdown. Realized gains, I'm positive, but it has a drawdown obviously because it has gone down drastically the last 3 days in a row. So I have the 220 short put. So I'm obviously down on the short put side, but net credit, I'm here 185 right here. I'm in the 180. I have 185 cost basis. Why? Because of the credit I received on these short puts, about 7 or 8 net, and then I have sold short calls on this that I closed out on Thursday for a profit. So net my cost will be at 185. So I'm still, I mean, it went down to the further after market, but again, that's irrelevant. Let's see what happens on Monday and Tuesday. So 185 is really like my break even right now on it. Again, we have a little bit of a rally sometime next week. I am going to heavily be aggressive with selling short calls on Nvidia at the 250 level, 235 level, 240 level. You know, because again, this 230 to 25 level it's going to be resistance. We're going to have the 21 come in, the 50 is going to come in. So this is going to be a lot of resistance on this 235, 245, 250 level. So I'm going to be heavily like 3x. I'm going to go 3x here. I have 6 contracts on the 8. I have 8 at a 185 cost. I'm probably going to be going 15, 20, 25 on the short side here to generate a lot more premium to feed and finance this drawdown that I have here on the short put side. And if you continue to go higher, I'm going to keep on rolling higher on this guy, and then these guys are going to become profitable, and that would be the ideal scenario for them when we have the next leg down. Then I could take, I mean, basically I'm going to run the wheel. I'm going to do the same thing I did with Square, where I was in a big drawdown, and eventually I was able to get out of it by maneuvering credits back and forth. I'm back in the same scenario, unfortunately. So I'll work my way out of it. I just apply every tool in my toolbox that I possibly can. Zim. I like where I'm at in Zim. I have the 60. I have the 60 short calls. You know, it's a little bit down, but I have 3 points of credit that I received. So I really have a 57. So I'm still a little bit down on this. But again, any little rally that I'm going to get, I'm going to heavily 2x sell short calls at the 65 level and a little bit at the 60 level. I'm going to sell at the 60 level what I have, which is like 15 contracts. And I'm going to sell another 10 to 15 contracts at the 65 level. Because again, to get back up here, it's going to take a lot for this to go up here. So I'm going to generate some credits here to offset this to give me like a 40, a 45 to a 50 cost basis when I'm done. Sometime next week when there should be at least one day that will be up on a oversold rally, and that's when I'm going to take advantage and pound. I'm going to just pound heavily on short calls here to generate credits to feed and finance these short puts. Okay, and then the other one that I have is Disney's short put. Again, on my longs, as far as shares, the only one I have is that TBT. Everything else I have is short puts because all my long shares they all got stopped out, and that's why you honor your stops on the long shares. I got stopped out, and it was a very profitable week. Realized gains were very positive last week, even though we had a down market, because we had good merchandise. We had good stocks that they were working, and when they stopped working, we stopped out. We took profits along the way on the way up, and net profitable. It's very simple. Okay, so Disney, I have the 115 short puts. I got two 115 short puts. So I'm still fine. I have no issues with Disney right now. And again, we have just a little bit of an update next week. I am going to be pounding the 135, the 130 short calls to generate premium to feed this guy right here. And net, this is going to be a nice profitable trade. Okay, so that's what I'm currently in right now. I'm not looking to get aggressively long on rallies. I might pick up some of the stocks that I'm going to be going over right now. So now I'm going to be showing you what I have as far as setups that I'm looking into. And I will take them if we have a rally on Monday and Tuesday with an extremely tight stop. Okay, so if the pivot hits, I take it. And if it comes back inside the pivot, I get out with an extremely ridiculously minimal loss, like less than 1% stop loss, because I am not looking for this market to be sustainable on the upside. I am willing to take profits on the up on strength, and the second it reverses, I'm getting stopped out, and I'm not taking any big losses. I mean a big loss will be anything over 7%. I'm not even referring to that. I'm thinking about big losses in this market. If anything over 3%, it's a big loss because this market is not sustainable to the upside. So you want to have your stops really tight, and you want to take really measured, breakout trades or measured entry levels where your stop is like extremely well defined and very tight. So you know when it's wrong and when it's not working right away, and you're able to get out, and no harm, no foul. Okay, so here we go. I'm looking at SQM at 80.03. 80.03. Why 80.03? Because I want to take out these guys right here, and then Friday's high. If we take out Friday's high, then I have a clear stop below 80. So if an 80.03 I hit, and it goes back down to like 79, 80 something, I'm out. Simple as that. Just it didn't work. And then if it uptrends a little bit, then it'll be above the 21. Then the 21 is going to be my guide to get out. Okay? Simple as that. BPT. I'm looking at 1461. 1461. I want to take out this high right here, this little base right here. See how it took out right here, and it came back inside and it broke it again, and it kind of held the 21, and it's kind of holding it right there. So again, if it takes out 1461, perfect, I'm in it. And then where am I out? I'm out 1448, something like that. If we go above 15 and we stay above 15 for a little bit, then 1477 is my stop, and I have a guaranteed non-loser. I mean when I mean extremely tight stops, that's what I mean. Okay, MUR. MUR is 3903. 3903, which is basically just above these little highs right here. It's got to be above the low. I have this trend line that I put on here, which is it's coincide with the 50. So I'm gonna write that trend line. So the 50 and that trend line is gonna be my stop. So if we break out, if we go above yesterday's low, that means higher than what it closed, and just a little bit to give it a little bit of room, about 39. I'm gonna get in it, and I'm gonna ride it as long as this trend line, which is gonna coincide with the 50, doesn't get broken. If the 50 gets broken, I'm out. So it's gonna be a minimal, 2.5, maybe 2% loss on this, stop loss. But if it goes up to the 40, 41, 42, 43, then my stop is gonna be at 21, and I have a guaranteed winner. STLD 8971. 8971. Take out this breakout right here. See how this breakout worked? You took it to 100, and guys, I mean, look at this. Right at 100, right? What did it do? Back down again. Where's it at? Right back to the pivot. I mean, give or take a few cents. So I like this area. So if it breaks out 8971, which is above the close, I'm in it, and I'm going to ride it as long as it doesn't break this pivot. So again, guaranteed non-loser. HP 4603. 4603, which is right here. I have my trend line at 4603, which is if it breaks above the close, and this little shelf that it had right here. Once it broke this little shelf, it took off. So I wanted to do it again. See, it round tripped right back. It went to 50 and it round tripped right back to the breakout. So it's back in play. If it breaks it again, I'm taking it. And where's my stop? Right below it. Less than 1% stop. NBR 171.36. 171.36. Guys, same concept. Taking out the close of the day on Friday. I'm taking out this pivot right here. Went to 200. What I tell you, the same thing I always tell you guys, that those round numbers, 100, 200, 300. It went to 200. It kind of peeked its head above it, and it came right back inside again. So I want to go for that trip again. I want to jump on the bus here at 171.36, and take it to 200 if it gives it to me. If it doesn't give it to me, then I'm gonna get stopped out. I'm gonna have a minimal loss of less than 1%. And along the way, if this happens again, I'm taking profits. Simple trading, guys. Very simple trading. Shell, this was a very good trade for me. I made good money on this. I took this breakout right here. I took it. I took profits here. I took profits here, and I got stopped out right there. So this was a good trade for me. So again, 56.17. 56.17. This round trip all the way back to the 21. So if it breaks out again from this little shelf, I'm taking it again. Okay? Shell 56.17. The next one is HAL, HAL 39.63. 39. Sorry, HAL 39.63. 39.63. Take out this high right here of yesterday. Take out the high of yesterday's close, of yesterday's price action to above 40. SBLK 2903. 2903. This little shelf right here. This was in play last time. Kind of broke out of it, and that's when it made its run. It's coming right back inside of it, and look, it held the 50. So if it doesn't hold the 50 and it breaks down, we're never in it. If it breaks above 2903, I'm in it, and where's my stop? The 50. Again, it's going to be less than a 1.5, worst case scenario, a 2% stop loss on this, and then hopefully we could take it to the mid 30s. SBOW. Is that what it was? SBOW. This is at 37.03. 37.03, which is again basically breaking out of the close, and then I have my trend line here, which is going to go inside with a 21. So if this breaks out to 37.03, I'm taking it, and my stop is going to be the low of the day of Friday, which is going to coincide with this trend line alert. So if my alert gets hit, I get stopped out. Very simple trading. Okay, hopefully if it goes to 40 and I take it at 37, I got a 3-point move, I got a couple hundred shares. That's a nice trade. WFRD 37.03. WFRD 37.03. Exact same entry level, 37.03. Why? Right here. They got this high right here with a little bit of a cushion, 37.03, which also coincides with Thursday's close. It's got to take out Thursday's close. It's got to take out Friday's high, and then get above this little shelf right here. If he takes it, it's same concept. I'm taking it to 40, 3 points on a couple $100. I'll take it. Again, I am not holding this to like 70 or 50. I'm taking profits. I'm taking like 56 to 70% profits anywhere near the 40 range. If I take it at 37, I'll take a 2-point move in this market with a couple hundred shares in a day or 2 days. That'd be wonderful. SU 33.63. SU 33.63. Taking out this little pivot right here. This little shelving area. It was in play. Once it broke out, it took it to 35, and it just sliced back inside again. So it's gotta build the base back here again, and then boom, take off. RYI 39.63. 39.63. I want to take out this little pivot right here. Once it took it, it broke out. We had this nice little shelf right here. That was a great entry, and look where it went. So kind of same concept here. If this kind of breaks out above 40, taking it to like 43, 47. DCP 36.73. 36.73. I got my trend line right there. Takes out this high. Last time it did that, it went to almost 40. It round tripped all the way back inside, holding the 21. I like that action. Holding above this 34.76 pivot on this shelf. So it round tripped almost back to this pivot right here. So this is consolidating. If it takes out this little high right here, I'm in it, taking it to 40, 37, 38. That'll be a nice 3 or 4 point move. FLNG 26.31. 26.31. 1, it takes out this high right here. 2, it takes out the middle of Friday's move, and it coincides with this breakout of this day where it kind of did its thing. So it's been down a lot this last few days. It's got earnings in 18 days. We must see a little rally to 30. So 26.31, you got a 4-point move on a $26 stock. That'll be wonderful if we do that. That'll be more than like a 15% move. So I'll take that. FLNG. And the last one is ED. ED, it's a utility, so it's not gonna, give you great returns. But hey, this little base right here, if you took it at 91, it went all the way to almost 98. It's now at 96. So this little base is gonna work. If you took it at 88, it went to 90. So this is coming back to a 21. Not too shabby. I mean, I'll take it at 98.23. 98.23, which is like this little shelf right here. I wouldn't take it here because, again, it's just gonna go. It can go sideways for a while and it could be dead money. So I want this shelf to be taken out again. If this shelf is taken out again at 98, we can see it play at 100 and be 1 or 2, 1 or 3. Take some profits. I'll come back inside for the next leg up. Okay, so that's it, guys. That's what I got for the week. Hope it made sense. Hope my market analysis kind of made sense to you guys, where we are not going to be going up sustainable in the very short term. Longer term, who knows? Short term, I'm talking about a week to 2 weeks to 3 weeks. We're going to be chopping around. If we do have a 1 or 2 day rally, take profits if we have stocks. If you're going to get in at the precise, good entry levels. So if you have a nice couple day rallies or even a 1 day rally and you have 5, 6, 7% gains, start taking profits, take money off the table, and don't worry about if it goes higher without you. Protect gains. On my short puts, what I'm doing is I'm going to be heavily selling short calls, selling into strength to generate a lot more premium and get myself situated again with a lot more credits in my overall accounts. All right. Please put the work in, study the charts, study the list that I gave you. Do not go too heavy. If you do take breakouts and if you do take trades, honor. The main thing here is we're going to make we're going to take shots at on making money. But the main thing you have to realize is that you can constantly take shots, but as long as you have your stops in place and you have your trading strategy and your systems in place to get you out where with minimal losses, or even like at a scratch, or if you have a little bit of a gain, you raise your stops to have a guaranteed non-loss, that's fine. Continue doing that. But make sure you have your stops in place and you honor them. And if your stops get hit, and then it bounces and it goes against you, it goes back higher without you, that is perfectly fine. Because you could have moments where, okay, well, I'm gonna get it here, it's a good stock, and look, you have like a 10, 14% drop from at the 80 level on a good, great, solid company. Okay, with great, look at this earnings number. It's just great, right? Top 20, great company. It's nearing 100. It's going to go back to 100, and boom, you have this. You want to avoid, this kind of thing when you have long shares. Okay, so honor your stops. Have a blessed rest of the weekend. Put the work in, study. The more you study, the more you're going to learn. The more confident you're going to be. The better trader you're going to be. The better trader you are, the more money you're going to make, and then you're going to have a better life.